Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Tesla's profits plunged despite record vehicle sales and a Musk hijack moment on his proposed $1 trillion pay package.
Plus, the White House says it is weighing broad software restrictions against China as it pushes for tech self-reliance.
And we sit down with T-Mobile's incoming CEO, Srini Gopalan, about the company's third quarter results.
But first, we check in on these markets, which, despite the geopolitical tensions, despite concern about some numbers not hitting the mark and the earnings underneath the benchmark, we're still up 0.6% on the Nasdaq 100, Ed. There feels like there's a risk-on sentiment more broadly, and that's as we eye oil prices on the higher side, inflationary concerns, but we shake it off when it comes to the Nasdaq. But you're looking underneath the hood.
Yep, let's go to Tesla. Down 3%, but not as down as much as it was when the stock opened. The story from earnings was really simple. Record vehicle sales or deliveries, but profits plunged. Higher costs. Tesla talked about tariffs, talked about the impact of policy and how it had expanded its products to react to that. But then, right at the end of the earnings call, the story became about Elon Musk and his proposed pay package. Listen to this.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Elon Musk there, ending his final moments on the conference call, making the case to shareholders for his $1 trillion pay package. Let's get more on all of the Tesla numbers. Itai McKelly is with us, Senior Analyst of Autos and Auto Parts at TD Cowen. And joining us, you've got a buy rating on the company, $509 price target, which is about 20% higher than where we currently trade. Going straight to the numbers perspective before perhaps a pay package, was there anything to shout about?
So the quarter overall, and thank you again for having me, was fairly in line with our previewed thoughts that the setup was fairly balanced for the stock going in. As you know, the stock had kind of rallied into the quarter. Estimates had gone up a little bit since the record kind of deliveries and then and the upside there. And so we did think that the setup was fairly balanced going in. The numbers themselves were fairly mixed, but overall in line on an operating basis. The numbers were about 7% above street expectations when you exclude the restructuring item that came out as a bit of a surprise. There were some below the line items such as a higher tax rate that caused EPS to miss. Free cash flow was actually very strong. So overall, some puts and takes in the numbers, but fairly in line to maybe even a bit better operationally versus consensus, including on a better gross margin overall.
Okay, so that gross margin and actually the cash that's still coming into the business, is that enough to really drive forward on basically the now focus of Elon Musk and Tesla more broadly, which is AI, which is robotics, which is autonomous?
Yes, to your point, the gross margin actually beat nicely in the quarter, 18% versus consensus at 17.3%. OpEx was actually higher, including for SG&A. So you're seeing the company making still substantial investments in future growth, including, of course, AI. But the free cash flow very strong. CapEx came in a bit below expectations, and the balance sheet is very strong with over $40 billion of cash and low 30s of net cash after debt. So the balance sheet's in great shape. You are seeing the company continue to make an investment. Good to see the gross margin beat as well.
We're trying to tie Musk's comments about the compensation package to the earnings that were posted. And the way that I look at it is that the board has set him over 10 years, both operational and financial goals. 20 million vehicles over 10 years. That means he needs to average 500,000 a quarter. They've set him EBITDA goals. And in the earnings statement and on the call, they tried to explain with a broader portfolio of models and more affordable models how they will achieve that. Did they answer those questions?
Yes, I think when we looked at the CEO compensation proposal when it came out, we were actually very encouraged. A lot of analysts have views over what Tesla should do, where they should be investing, and what the future will hold. We've been very bullish on autonomy, not only for the robo-taxi vertical, but also for what we call the consumer AV vertical, the FSD vertical. And we thought the product goals, the four of them kind of laid out in the compensation proposal, were very aligned with our kind of long-term thesis of where Tesla should be investing and what what they should do, particularly around the FSD part of it, given how disruptive that could be. It was that the company's comments last night on the call were supportive of that, including kind of making the point that as they launch these incremental FSD features, that could accrue very nicely to EV demand and kind of address that issue as well. So those goals seem very aligned with our thesis. It actually turned us more bullish on the stock kind of long term when we read those proposals.
Itai, this morning, the New York State Comptroller joined us on Bloomberg Surveillance. Listen to his take on why they voted no on the comp package.
When you see the excessive compensation package, I mean, you know, credit to Mr. Musk, he's already one of the richest men in the world. How much more rich does one person have to be?
But for Elon Musk, it wasn't about money or how rich. It was about voting control. The argument that he needs a certain level of control for Tesla to realize the vision of humanoid robotics and more broadly AI. Where do you stand on that?
Sure. Yeah. Absolutely. Elon's kind of made that point very clear. You know, ultimately the proposals, you know, are tied to market cap targets as well. They are, to your point, ambitious. They will require very, very strong execution. But once they're delivered, if they're delivered, there's a substantial amount of upside to EBITDA longer term, as we see it, and you know, would give Tesla a very significant competitive positioning as well. So given the amount of execution it needs to take there, I totally kind of understand management's and the point around this. And again, those goals very well align with where we think Tesla should focus on over the next 5+ years. And so, you know, we felt pretty good about, you know, the overall game plan for where to invest, where to focus on. And we felt those goals for us were positive in the scheme of where we see the company going.
Itai Michaeli of TD Cowen, thank you very much. Now, coming up, the White House says it's weighing more export limits against China, this time targeting critical software. We have more on that story next. This is Bloomberg Tech. Let's get over to the Evident AI Symposium taking place right now in New York and bringing together hundreds of banking executives and innovators to discuss AI adoption in financial services. Goldman Sachs CIO Marco Argenti speaking with Bloomberg's Eric Schatzker.
How do you take people through this journey? And so the human factor, the human element are more important than ever. Today I say that technology is even, what technology or AI can do is ahead of what people accept that they can do with it. So there is a gap there. There is a cultural gap.
Friction.
I think there is friction, but it's also like sometimes fear, right? And this period of transformation creates, for the first time, creates almost like a competitor to the human species, which we never had before, which could be in some cases smarter than us. And the way people face that threat is very different. And some people adopt it and embrace it, and some people are just resisting it. But back to the importance of the first topic that I talked about, why is data so important? Sometimes when a lot of, we talk with other people in the business and other CIOs, etc., or people are asking me, what's the best advice? And today the best advice is really make sure that you have a great data quality story in your firm, because that will be the single most important determinant of the
Goldman Sachs CIO there, Marco Argenti, talking with our own Eric Schatzker. Catch the full conversation going on at the symposium on Live Go. But now we switch gears to what the White House is saying. Well, perhaps it's weighing new export limits on China, but this time targeting critical software that could send ripples through the tech sector. Bloomberg senior tech editor Mike Shepard joins us now with more. And it's trying to understand how far-reaching such limitations would be, Mike.
Well, it's a great question, Karen. We still don't know the answer about how far the scope of this will go. But the Treasury Secretary said yesterday that everything is on the table. And really, this is another instance of the U.S. or China trying to escalate ahead of a key round of negotiations. And we have one coming up this weekend where the two sides will try to hash out their differences. What the U.S. is hoping to get from China this time around is a relaxation of some new export controls on rare earths that Beijing just imposed, much to the chagrin of the U.S. and many of its allies. And Treasury Secretary Bessent not only says that everything is on the table, but he is also saying that the U.S. may act in concert with its allies. And some of the areas that could be targeted are critical software, including chip, software used to design chips, but it also could be broader. Reuters reported yesterday that they may go as far as looking at anything made with U.S. origin software and trying to restrict that. And that is a measure that the U.S. took against Russia back in 2022 following Russia's invasion of Ukraine.
Mike, overnight, a communique from the Communist Party's Central Committee in China. The country will aim to, quote, greatly increase the capacity for self-reliance in the domains of science and technology. Timing, what do we need to know?
Well, Ed, this is clearly a challenge for the U.S. because one thing we have heard from the Trump administration is an articulated desire to try to sell back into the Chinese market some of the American tech stack. And the idea, this is one that we have heard from White House AI advisor David Sachs and others, that if we can sell into China, we can compete with China in other markets globally. So this is something where we see China is perhaps pushing away from the U.S. tech stack and trying to go on its own. We also have some great reporting from our colleagues in Asia and Africa that is an example of how important this is. We see how DeepSeek is making inroads in Africa in today's big take. It's worth reading on the terminal and elsewhere if you haven't seen it, but it shows just how China is building this model at home of lower cost AI, both the hardware and the software, and then offering it in markets where the U.S. is hoping to compete, but perhaps being beaten to the punch by Chinese innovators.
Bloomberg's Mike Shepard out of D.C. Thank you very much. We have breaking news crossing the Bloomberg terminal, reporting from the Wall Street Journal. President Trump pardoned Binance founder Changpeng Zhao on Wednesday. The markets are reacting. If you look at XBI USD, Binance coin, it is spiked as those headlines cross the Bloomberg terminal. The team in New York getting it up on the screen. The Wall Street Journal citing sources on the pardon of Zhao by the president. Bloomberg's not matched the reporting. We've shown you the market reaction. We'll look into it, and when we have more, we'll bring it to you. Let's get back to Bloomberg Tech. Natalie Gallagher, principal economist and director at Board, an AI-powered enterprise planning platform. Natalie, you provide macroeconomic analysis and strategic guidance on business investment and economic policy to global companies. You just heard Shep going through the software component on trade back and forth, and then China realizing that it has to look at itself in some domains where it relies on the United States. As you track trade right now, I'd like you to answer, does software actually play any role in any of this negotiation?
Yeah, I think it plays a really significant role in this negotiation, right? Because as we talk about AI and the importance of really being a leader in this space, we know that the U.S. right now outspends China on a ratio about 5-1. But of course, there's a lot of accusations around distillation. And when we zone out from an economist's point of view, it becomes a lot less about what's the marginal cost to China to produce a model, and more about, are we doing what we can to protect U.S. innovation? And it's really key that we get this right, because this is an industry that's estimated to translate into trillions of dollars in global GDP over the next decade.
So when we think about the actual U.S. names that get caught up in this, analysts are pointing to Cadence Design Systems, Dassault Systems, Synopsys, as well as being companies that might be limited in their ability to export to China. But more broadly, what is the biggest element that U.S. can bring to bear? It still seems to be semiconductor. It still seems to be the IP when it comes to GPU and compute.
Yeah, I would absolutely agree with that. Our power is really in intellectual property. We've shown a lot of resiliency there, a lot of leadership there. That's our key metric for, as we move forward, what we bring to the table, absolutely. And we'll have to sort of continue to lean into that and really have these conversations around policy to continue to lead in that space.
Right now, are you seeing any data, primary data or secondary data, from any economy around the world that tariffs in the technology context or export controls are damaging any industries that we're talking about here?
It's actually been really incredible. Tech has shown an amazing resiliency. Our global economy has shown an amazing resiliency when we talk about the effect of tariffs, right? And where we would anticipate to see it when we talk about especially these relations with China, we would anticipate it to see in consumer electronics. Now, the story of 2025 so far, and I wouldn't just say this for the US, but globally, has really been this idea of delayed pass-through effects. Now, as we get into the later half of 2025 into 2026, very likely that it's going to not continue in that way. Expect inflation to be persistent, really moderately accelerate as we go into 2026. So there will be an impact.
We're talking about the environment, and some of it is about headwinds and risk.
Yeah,
but actually,
absolutely.
when I think about where your research is at, you're looking at M&A.
Yeah.
You're looking at investment flows. Deals are getting done, at least infrastructure-wise, in this country. Yeah. That's all quite positive.
Yes, absolutely. I mean, in many ways, the tech sector has acted as a macroeconomic stabilizer for greater economic growth, and it's been fascinating to see.
What's also been fascinating is how we discern where we protect talent or not. Look, there's been a lot of focus on H-1B visas. There's been a lot of focus on trying to make the US more self-sufficient with its own people. But should we be looking more broadly at who the AI talent is in some of these big tech companies and where they're coming from a national security and indeed an economic perspective, Natalie?
Yeah, I mean, it is such a fair question, right? When we take a step back, we see that overall the labor market has softened meaningfully. But when we talk about the specific talent around AI and machine learning, we see a lot of labor market tightness, meaning there's so much demand. So as we talk about H-1B visas and the overall impact, it is very likely that the demand is absolutely there for AI investment to necessitate global talent in this space.
Natalie, it's been great having some time with you. Natalie Gallier, Principal Economist at Board. Appreciate it. Now, coming up, we're going to be talking to T-Mobile's incoming CEO, Srini Gopalan, about the company's third quarter results. This is Bloomberg Tech. T-Mobile. It added 1 million postpaid mobile customers. It raised its outlook for the year. And look, the boost is coming at a time where we're seeing the deal that was done with US Cellular, the launch of the new iPhone 17. But interestingly, the market's kind of digesting this with perhaps looking a little bit at the revenue expectations, potentially missing there a little bit. And it's locked in a fierce battle, of course, competition, AT&T, Verizon. Who better to speak about all of this as T-Mobile's Chief Operating Officer, but he's the incoming CEO. Srini Gopalan. And I know this is a special day with really being there for the first set of earnings as the incoming CEO. But the market is kind of trying to find the flies in the ointment here. Why? Why do you think that million subscriber to postpaid wasn't enough?
Look, I don't spend my time trying to predict market trading on a day-to-day basis. My focus is on building a solid, robust business, which is what we've got, and a business where we're constantly expanding and widening our differentiation. That's the core of what we're focusing on. Because when you look at this quarter's results, you know, T-Mobile's been the growth leader for 13 years. And yet this quarter, we added our highest number of new customers ever. And it's not just volume growth. That translated into value growth. I'm not sure where you got the missing revenue expectations from, because we exceeded consensus on service revenue. And we delivered 9% service revenue growth, along with 6% EBITDA growth. And all of that translates into that all-important metric, cash, 26% cash conversion, which is the highest in the industry. So we're feeling really, really good about where the business is.
Just to go into the nuances, for example, service revenue, $18.24 billion. It was up 9%, but the estimate, according to Bloomberg, consensus was for a little bit less than that, 18.16.
Yes.
But the revenue of 21.96 was perhaps slightly shy of the 21.98. But as I'm saying, this is flies in the ointment perspective here. But I think the average revenue per user perhaps is one to look at, how it's being pulled down a little bit because you are in this fierce competition. And I'm interested as to how much, to get over all these new subscribers, you are having to go toe-to-toe with some of the more incentives out there.
Sure. So let me parse that question into three bits, right? Getting new customers. Now, if you look at our cost of acquisition of new customers, and all of that flows through to the bottom line, we added 1 million postpaid phone customers and still delivered 6% earnings growth. That's because a lot of the new customers are coming to us because there's only one place where you can get best network, best value, and best experience, and that's T-Mobile. So while we talk about, you know, cost of new customers and the rest, when you have differentiation, you can drive earnings growth as well as bringing in new customers. From a competition perspective, look, this industry has always been competitive, And let's just pull back out of the detail of promotions and the rest. You look at it at an industry level. The industry has seen a 50% growth in free cash flow in the last 3 years, right? At the same point as delivering more value to customers. And your last piece of average revenue per user, our ARPU actually went up by 1.8% this year. In our guide, we have an inbuilt 2% guidance increase on ARPU, which was higher than our earlier guide. And so from our perspective, some other players have a different problem, which is some of the incumbents have their existing customers paying a high price. So when they try and attract new customers, what ends up happening is dilution of ARPU. We don't have that problem. We've historically been the value leader in this market.
Hey, Srini. iPhone cycles are great for attracting switchers. Yeah. You and I have talked about that a lot at Apple Park. But the companies, those incumbents and you, don't make any money on those handsets. Is it fair to say you're sacrificing revenues for higher customer numbers in the event of a new product cycle like we're having in the iPhone?
So 2 parts to that. One I agree with, and one I debate. I just reject the starting point that we don't make money when we do new iPhones. Our customer lifetime value, which is the way we think about the profitability of a customer over the lifetime, are really, really strong. Look, if we didn't make money when we attracted customers, we couldn't deliver 1 million new postpaid customers and still grow our EBITDA at 6% and still deliver 26% cash conversion. So the premise of that question, in my mind, is just false. On the other hand, I think you have an excellent point on the switchers piece. Look, every time there's a new device, customers reassess the trade-offs they've made historically, and they look for what's the best place for the new iPhone. And T-Mobile is conclusively the best place for the new iPhone. Just to give you some stats which give you a sense of that, right? On the new iPhone, on the T-Mobile network, you get 90% higher speeds than one of our competitors and 40% than the other, right? So this is a great switching moment. It's a switching moment when our differentiation has widened, and that's why you've seen this outsized and profitable growth.
Srini Gopalan, T-Mobile, currently the COO, soon to be the CEO. Thank you very much.
Thank you.
Now, coming up, we're going to break down the conversation on Tesla with the man who literally tore apart the company's cars, Sandy Munro, a.k.a. the teardown titan. A conversation coming up in the back half of the program. Stay with us. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. Let's take a look at these markets because on the Nasdaq 100, we're shrugging off some of the anxiety that you see in the bond market and indeed in the oil market, worries about inflationary pressure coming from oil. Instead, we look at what's perhaps happening underneath the hood in terms of earnings, and some semiconductors on a roll today. We're up 0.6%, but I shine a light on some areas that are not doing so well. There's a surprise pre-announcement coming from Supermicro. Now, this has been a company well loved in the AI trade as they design some of the servers that are going into a lot of these data centers. But actually, they're saying that the upgrades aren't going to be happening really until their fiscal second quarter. $5 billion is what they're directing us to in terms of sales, and it's well below expectations of $6.5 billion. We'll get more detail later in November when they come out with their true earnings date. We're looking at Tesla, also off by 1.7%, bouncing off of its lows. But we see also earnings per share, the sacrifice there. We're seeing profitability down some 30%, even though we saw record volumes of deliveries in their quarter. We see operating expenses just shooting higher, and we want to get into all of that with our auto czar, Craig Trudell, who's joining us now. And really, this was an earnings where the fundamentals were almost ignored on the conference call by the executives. It was much more about, once again, AI and robotics in the future.
Yeah, that's right. And I think we've sort of grown accustomed to that, right? Where it doesn't necessarily matter what the numbers are. Oftentimes what Musk has to say matters more. But I think in this case, absolutely there was some expectation that, after, vehicle sales were so much better than a lot of people anticipated. I think that maybe contributed to some recovery in consensus for these earnings results that we got last night, and yet a lot of the sort of pass through from that strong top line was maybe a bit on the disappointing side, and there didn't seem to be enough oomph to what Musk had to say to sort of do much for the stock here.
Musk talked largely about AI and the promise of AI in the future, but the CFO and in the earnings deck gave us more about tariff impact to costs, the environment with policy, CapEx plans in the 10Q, which you caught this morning, I think, as well. What were the other things that the market could go on?
Yeah, I think the $400 million tariff impact just in the quarter was noteworthy. It was hard to tell from the call last night, to what extent they were alluding just to that, being the number and the impact for the energy business, or if it was energy and autos, because there was some possibility there that they were referring to multiple parts of the energy business. But in any case, we've known that was going to be a problem for Tesla because they do procure battery cells from China for that side of the business. I think another thing that was very interesting to me was just, we expected to be a drop off in regulatory credit revenue, but already we're seeing, a pretty substantial drop from a year ago in that business. And you would think that there's more to come in that regard now that we have not only tax credits going away, but also, fuel economy and emissions regulations having been gutted by the Trump administration.
Bloomberg's Craig Trudell, thank you very much. Tesla argued it's expanded its product offering and it emphasized its most affordable models yet, but many investors just aren't buying it. Let's get the engineer's take. He was called the teardown titan, decades of experience tearing cars apart and telling automakers how well or how badly they're built. Now retired, Sandy Munro was once a big Tesla skeptic, criticizing early Model 3s. But he changed his tune as the company improved its cars and offered more models. At times, a Tesla shareholder and part of the Tesla and Elon Musk fan community online. He has been watching closely. Delighted to say Sandy Munro joins us now. Sandy, we wanted you to come on the program because we thought there'd be more emphasis on this new generation of standard Model Y and Model 3. And the question I get most for you is, what did they actually engineer out in terms of the cost?
Well, at the end of the day, they did quite a few things that dropped the price, or let me rephrase that: the cost of getting the job done. Well, number one, they moved back away in some cases from the giant castings. The giga castings are a great way to get rid of componentry and whatnot, but occasionally what you do is you wind up in a situation where your piece costs are a little exorbitant. So they moved a little bit sideways on that. They still have some of their product there, but some of it has moved away. As far as what I saw, as far as the reduction in the amount of cost associated with the product, those are all kind of things that you do after you've launched a program. So the amount of things, if you'd like, that will reduce the amount of cost are kind of right now insignificant, but they lay a plan for the future. So if you start looking at some of the things that they've experimented on with the Cybertruck and whatnot, where they've gone to steer-by-wire, Ethernet controls, I mean, that's the stuff you need to drop the problems associated with latency. Latency being the amount of time you need to control a car in a crash. So
yeah. So were they the right sacrifices, Sandy? Are you feeling that they're making the right decisions to get to the right price point at the moment?
Yeah, absolutely. Everything I've seen, I like. Well, not everything, but most everything I've seen, I like.
What don't you like?
The big thing, what do I like?
What don't you, Sandy? What don't you like?
What don't I like? The things I don't like are kind of like, I don't understand why they haven't brought I'm calling it the Model 2, the cyber taxi. Why have they brought that out? I'm ready for that right now. I don't need a steering wheel. I've already been in that vehicle several times, and I think it's the ideal opportunity to sell for people that are my age. No, I'm kind of agile. I'm not a cripple, and my reflexes are pretty quick. Actually, 2 days ago, I caught a fly at the restaurant, and I shocked the daylights out of the waiter. At the end of the day, that product should have been out in the marketplace like right now. We need it for the baby boomers. So that's the thing I don't like.
Sandy, I don't know if you remain a Tesla shareholder or not, but right now, you know, the company, thank you for clarifying, has a lot on its plate. One of the pieces of news was that they're building out the assembly line for the humanoid robot. You have a deep analysis of the things that Tesla does itself as a vertically integrated company. Could you just give me your assessment of how you think they'll be able to establish their own supply chains and build such a product in line with also delivering 20 million EVs over the next decade?
Let me attack that in a couple of different ways. Number one, I believe when Elon said that this is going to be maybe the biggest product ever or something, I can't remember exact words, he is absolutely correct. Again, I go back to this aging population. It costs that robot should sell for somewhere around 100 and a quarter each. Okay, if I take a look at nursing care, you're looking at each nurse, and you'll need 3 of them because for 24-hour kind of stuff. Each nurse is going to be getting about 100 and a quarter, say maybe 100 a year, with benefits maybe a little higher. Man, this is the best return on investment ever. Not only that, grandma won't have to worry about taking her pills. Somebody won't have to try and pick grandpa up and take him to wherever he needs to go. I mean, this is a huge opportunity. And I've been working on robots since I was 16.
Yeah.
So that's a long, long time. That's like 60 years ago. This is a huge thing. I'm more up on that than I am the cars.
Sandy Munro, the Tesla teardown titan. Maybe you'll be a robotics teardown titan too. We appreciate your time. Thank you very much indeed. Coming up, we speak with Redwood Materials CEO and Tesla board member JB Straubel on the company's latest funding round. This is Bloomberg Tech. Battery recycling startup Redwood Materials has just raised $350 million in a Series E funding round, pushing its valuation past $6 billion, according to sources. I'm pleased to say, welcome him to the show, JB Straubel, Redwood Materials CEO, Tesla board member. And JB, why raise? What's the money going to be used for?
Well, thanks for having me. And the primary purpose for this particular Series E raise is actually to accelerate our grid energy storage business. So many people think of us as a battery recycler only, but on top of that platform, we've built a growing energy storage business that is really quite exciting.
JB, I'm recognizing that there's a pivot here for Redwood, right? And the question that we get a lot for you is, what is the viability of that legacy recycling business under the Trump administration and the policy environment we're in? Could you explain that based on the emphasis you're putting on this next-gen energy demand from data centers?
Yeah, well, I guess the first thing I'd highlight is, there are no federal incentives. There's no sort of infrastructure for the federal government to support battery recycling. There never has been. So what we do and others do is purely driven by economics and being competitive today with mined materials. And in this current Trump administration, actually, we've seen huge excitement around the critical materials nature of what we're working on. Because, very directly, we're a quite substantial source of cobalt, nickel, and lithium, and copper, all of which is domestically sourced. It's already here, it's already secure. So from that point of view, I actually am perhaps even more excited about the core recycling business in this administration than I have been in the past.
Well, JB, just real quick, I was of the understanding the IRA did provide for incentives for recycling. Am I wrong about that?
No, the IRA provides incentives for some of the material manufacturing that sort of evolves further downstream from recycling. So if you were to make, so that's the more the manufacturing side, but in terms of collection, refining, and selling those materials back, there's no incentives, there's no particular premiums for that material.
And boy, in this moment of electrification, in this moment of need for compute and data centers, do we need a lot of those mined materials that you talk about, and with rare earth metals being a concern too. I'm interested in just who you then get strategically on the cap table to drive that forward, JB. Why NVIDIA, for example? Interesting that they're coming on.
Well, NVIDIA's interest is clearly evolving from our energy storage business. And what we're doing is taking old transportation battery packs, refurbishing them, and then redeploying them, extending their life in a very low-cost setting to provide these energy storage services for data centers, for AI factories, and for the expansion of industrial grid electrification. And this is one of the cheapest ways to provide grid energy storage. It's far cheaper than deploying brand new batteries, and it can be a complementary strategy alongside of our materials recycling. So this is really what's driven NVIDIA's excitement. I think they see that energy access and electricity availability has become a key strategic point for AI factory expansion.
Can we talk about the money, therefore, that you need coming in? You've raised this equity, but you're also depending on money coming from a federal perspective, a $2 billion loan from the Department of Energy. How is that in status? How are you seeing that navigation when it looks as though the current administration wants, well, equity for every time that they're giving some sort of federal funding?
Well, everything we're doing is supported by private funding. That's something we're pretty proud of, and this round continues that focus. The government obviously has taken a different approach in looking at the DOE loan program, and there's a huge amount of interest in a lot of these projects. But I'd say from our point of view, we're focused on critical materials and energy storage, and looking at the applicability of that for those interests.
JB, you are on Tesla's board. You recused yourself from the special committee on comp. I know that. Elon's argument is he needs voting control of Tesla. Explain that to me as if I were a 5-year-old, please. The basics of why the board's position is that Elon should have voting control.
Well, I can't say too much more about Tesla matters today, but maybe I would just comment that the focus is really on providing shareholder value, and that's really the sort of first and foremost direction that we look at these things from. So I think this proposal really does that, and it provides potential incredible upside growth to the existing and future shareholders.
And lastly, JB, you're aware of the Bloomberg reporting about the manual release mechanism in Tesla car doors. From the board's perspective, are you aware of any action Tesla's taking to change the design of that mechanism, or has it been discussed at the board level?
Well, again, I can't go too deep on these topics, especially if there's any ongoing legal proceedings. But we take any safety matters incredibly seriously. This is one of the most important issues, and we're constantly watching that. We're constantly looking at new events and reports, and we'll stay closely aware of any actions going on there.
Redwood just raising $350 million. I'm told by sources the valuation more than $6 billion. A pivot from just recycling to a broader look at what's happening in data center and the energy supply chain. JB Straubel, Redwood Materials, really appreciate your time. Thank you very much. IBM reporting disappointing revenue in 2 key software categories, including its closely watched Red Hat unit, sparking concern among investors who see those businesses as essential to growth. IBM CEO saying, quote, "I'm going to be upfront on one area where it didn't look so good. Red Hat growth slowed from 14% last quarter to 12%, but I'm not worried about that if I'm looking to 26. Caro, that was your interview. What else did you learn in that conversation?
Yeah, Arvind Krishna was really trying to, own the area that he knew would be of concern and the sequential slowdown, and that was from a constant currency basis, Ed. But he was saying that this is legacy issues. This is from like 23, 24 era. We're now rectifying and now seeing really strong upfront demand for Red Hat. So he's not worried about 2026. In fact, he's really trying to redirect everyone's focus that they are an R&D business. They are super heavy in terms of the software side of things. We've got a pivot, this inflection at what's wanting in terms of consulting. But he's very pleased about the revenue growth that he keeps seeing. And they're also really thinking about the AI book of business, $9.5 billion. Analysts really shouting and applauding that sort of level. But it was interesting also that this is a company that's thinking about quantum. And boy, is there a lot of quantum that's in the news. But I think the AI book of business is one to really be keeping an eye on, $9.5 billion in just about 2 years. So he was more optimistic than perhaps the share price would be weathering on the day would seem to show at the moment, Ed. But I think what's really interesting is all of this comes on the heels of all these earnings that we're seeing. And we're going to be looking at Intel a little bit later. I know you in particular are going to be trying to analyze that. We're off by 2.6% on IBM. Let's look at where we are in terms of where Intel trades ahead of its numbers, up 0.7%. Notable as we think about where its business is going to be for growth when they've also given a 10% equity stake to the US government. Who else is giving equity stakes to the US government? Maybe quantum stocks, some reporting out there from the Wall Street Journal, Ed, that we got a whole raft of quantum companies maybe talking about federal funding going forward. And of course, that shares are on the up. We see Ion and Q up 8%, but look at that, D-Wave up 15%. Now coming up, let's talk about what else you've been up to, Ed. Rivian's e-bike spin-off, also debuting its first product. That's not the only news coming out from the EV maker. More on that next. This is Bloomberg Tech.
This is the first product from Also, the micro-mobility startup spun out from EV maker Rivian. It's called the TMB, an e-bike that starts under $4,000. TM stands for Transcendent Mobility. It has a unique pedal-by-wire system, no chains or gears, just sensors and software converting pedaling to electric power.
2.5 years ago, I broke a story that Rivian, the EV maker, was working on a bike. We just didn't know what kind of bike. Now we do.
Rivian saw a chance to reach short-trip riders and leverage its battery tech. Now Also is independent, launching its first-gen e-bike after raising hundreds of millions of dollars. I'm riding the premium version of the TMB. There's a touchscreen interface for modes, maps, and music. The detachable battery pack has USB-C fast charging and uses the same cells as Rivian's EVs. The modular seat or top frame adjusts without tools. It can be shared. Adjustable pedal assist with speeds up to 28 miles an hour. There's also an accelerator that throttles up to 20 miles per hour where it's allowed. One more thing. Also's planning 4-wheeled variants for families and businesses. Reservations are open, but deliveries start next year. Can a Rivian spin-out really redefine the e-bike?
Ahead of that ride, we spoke to Rivian CEO RJ Scaringe about what the launch of Also's e-bike means for his company. Listen to this.
Aside from the fact that Rivian's a shareholder, it also allows us, from a mission point of view, to see to seed the market or to seed customers with an exposure to something that's advanced technology in electrification that has a much lower step-in price than, let's say, a car. Even in R2, with a starting price of $45,000, a lot of folks maybe want to try electrification, but want to try it in more like a sub-$4,000 version.
Now, in other news on Rivian, we understand today it's cutting about 600 jobs as the company contends with an unsteady market for EVs in the US. It's all according to a source. And we should note that the soundbite that we just heard from RJ Scaringe was part of a conversation that took place before the news of the layoffs at Rivian, right, Ed?
Yeah, that's right. Commercial roles being cut, but Rivian on the board, big stakeholder, and also.
What a busy show. Extraordinary package. I love seeing it on LinkedIn and across various of the social networks. Go see more of Ed on a bike. But that does it for this edition of Bloomberg Tech.
Yep, check out the pod. You know where to find it. Lots of you listen to it. Thank you very much. This is Bloomberg Tech.